Big moves destroy traders all the time. People get liquidated, people get wrecked, people lose money, people get upset. But today I want to talk about how to approach these markets after a really big move up or a really big move to the downside. What we don't want to do is we don't want to be people that trade with emotion and get absolutely wrecked. In fact, if we take a look at this order flow chart last night on this big move to the downside, we absolutely saw a whole bunch of longs get wrecked, but we saw a whole bunch of shorts try and short the exact bottom, and then they got wrecked, right? What do we want to do after a big move? Most of the time, every asset that we are trading is going to be trading in a sideways range. And so after a big move up or after a big move down, what we want to do is we want to identify what is the sideways range, and then we are going to use that sideways range to get into trades after the big move has already occurred. Like, the reality is, if you didn't take a short from up in this area, there's really no purpose unless you're FOMOing in. We don't have any kind of short entry along the way down. And unless you're just trying to catch a falling knife, we don't have any long entry here unless we can first establish some kind of a sideways range. So how are we actually going to do this? The first thing that we're going to do after the price gets a big move to the upside or to the downside is we are simply just going to mark out where did price put in that low, right? We're going to do that right down here. And then we're going to mark out where does price put in the initial high, and we can mark that out right here. And then what this does is this actually gives us a framework to look for now highs and lows locally from which we can look to take trades. The next thing we're going to do is we're going to take a volume profile right over here, fixed range volume profile in the prediction and measurement tools down here. And we're going to take that thing and we're going to drag it through all the price action that we see. Okay. So this is going to give us 4 major zones now where we can look for trades. And the major areas that we want to be aware of are, number one, we want to be aware of the highs of the range. We want to be aware of the lows of the range. And then we want to be aware of the value area of this sideways range. Why is this important? Because after a big move, most of the time, we're not going to get much continuation. We're going to range sideways for a little bit, right? People call it consolidation. But consolidation can be an absolute gold mine if you're a scalper or a day trader. And we can see that after Bitcoin had the big dump, the market has actually established for us a fair value for the price of Bitcoin, which is between the price of 22,200 and about 22,450, right? So what does this mean? It means we can expect that for the next day, the next few hours, the Bitcoin price is probably going to range here. This is going to be the framework from which we look for trades. We're going to look for trades if the price comes above the highs with bearish divergences, and we're going to look for longs if price comes below a certain low or to the value area bottom with bullish divergences, right? And so when I posted this morning in my Casper Crew VIP Discord the levels I was looking to trade, we can see all I simply did was mark out these key levels in the sideways range, and we have very specific areas that we are looking for trades. And the most recent short trade that I was looking for was basically to come up and take the highs from this zone right here around 22,477, right? 22,477. The reason why I was looking to short this zone right here is because we were coming to the value area high of the local range. We also had some confluences. So what you want to do when you come to the charts is you want to say, okay, where are the highs? Where are the lows? These are going to be the areas that I'm going to be looking for a trade. Because if we're trying to trade and we don't have any kind of clear plan, right? We have no plan about where to be looking for a trade, we're probably going to get sliced up. But if we understand these areas where we can be looking for trades, well then, when the time comes, we can get into the trade. So let's take a look at what's happened here. As you can see, I'm actually in a long from this wick right down here, very, very juicy. And then I've actually added a little bit to my short as we came up to here because I am short from much higher. And so I did add a little bit to it when we took out this high. And let's take a look at the chart and see what actually happened. When we came down to this low, the value area low of this range, we can see that the price was printing what's called a bullish divergence. The momentum was getting higher as the price was getting lower. And this is called a bullish divergence. It kind of looks like uneven butt cheeks, right? We have the left cheek, very juicy. We want to pop it with a needle, squeeze out the ravioli, That right cheek is not very juicy at all. And the reason it's not very juicy is because there's no gravy inside. But what's very important about the right butt cheek, as we can see in the picture, as the price is getting lower down here to key support, right? You see the price getting lower. This is where the money's at, right? She keeps her tip money in that right butt cheek. And so you can see from this point, we have gotten a big move to the upside. And where do we come to? We come to the value area high of the range. Right? Now, when we come to the value area high of the range, notice what happens here. We're getting a bearish divergence where basically the momentum is getting lower as the price is getting higher, now giving us a sign that we're going to reject from the high of the range. And again, if we have these levels and these plans in advance, well then it makes it very simple for us to take the trades, right? And so we can take a short from right here. And this is the exact level we were looking at in the Casper Crew VIP Discord. And by the way, if you want to join the Casper Crew, where we gave the short from the high in advance, we give a whole bunch of trade setups in there every single day. The levels we're trading, scalping, day trading, all that kind of stuff. You can go to patreon.com/Jason Casper. Also to take advantage of trading on ByBit with 0% limit fees, a very good deal for people who are scalping ranges like this because those fees will eat into your profits. Check out the link in the description and in the pinned comment. If you deposit $100, you get 1 month free of the Crypto Fusion trading bot. It's actually a really cool tool also for a 20% discount on both trading courses. If you want to learn how to do this and do it right, stop gambling and start trading with the system, 20% discount on the courses at jasoncaspertrading.com. So now you can see we're starting to get a move back down into the range, and we're simply just going to keep trading this sideways range all day until all of a sudden we break out or break down from the range, in which case we will look for levels to the upside or to the downside, right? Very systematic, very relaxed. We don't have to worry. We don't have to flop and grope. We don't have to chase price. We can make a plan, and then we can trade that plan. And that's where the real gains are going to come, right? Plan trades are profitable trades. That's it for today's video. May God bless you all in the name of Jesus, the Messiah. I pray everyone, even if you're not religious, is very blessed. Hope you have a great weekend, and I'll see everybody in the next video. Peace! Oh, wait a second. I didn't stop the video. Peace! Oh, wait a second. I didn't stop the video. Peace!